Peace, prophet people. This the God Absolute from the Absolute Boss Collective coming back at you with a brand new video. The theme of this video today is going to be, I'm going to answer some questions that came to me from a young blood who want to know about this game. You know, we chopped it up a little bit over the last year or so. We casually discussed the markets, and we really got to really kick it a couple of days ago, and he really has some questions that he would like for me to answer. So that's what this video is going to be about. I'm going to answer all his questions, and we're going to take it from there. Now, if you are new to the channel, do yourself a favor. Do me a favor. Hit that subscribe button. Hit the notification bell so you can be alerted to when I come out with brand new content, so you could be up to speed with what's going on at the Absolute Boss Collective, and you can get down with the Absolute Boss Collective. I have a link below if you would like to sign up with Webull with at least $100 and get some free stocks. I think four free stocks if you sign up with $100. That link is located below. If you would like for me to answer your questions, leave me a comment below and we'll politic about that, and I can do the same for you. You know what I'm saying? So without further ado, we're going to get right into it. So the brother had a couple of questions for me, and one of the things that I always ask prospective clients and friends and brothers and sisters who are not as familiar with the market as I am, is I always ask them, you know, tell me about any stocks you hold in, any stocks you're interested in, things of that nature. The reason why I do that is to kind of show people that they really have what it takes to identify good companies, good businesses to invest in. You know, big Wall Street will have you believe that you as a retail investor can't do this. And I've proven, you know, over years, months, and days that it can be done. Because many people that I speak to, they always pick winners. Okay, so let's get into the brother's portfolio. So right now, the brother's holding ABNB, ARKK, Microsoft, FLUX, FCEL, FCEL, Tesla, Amazon, and BNGO. Okay, those are the stocks that he's holding in his portfolio right now. And I would like for you to know, brother, those are some excellent stocks. Excellent. I could not be more proud of you for picking those companies, because they're winners. If you want to look at the performance from the pandemic low, which was March 23rd of 2020, till now, today, Friday, the Power Day, the 5th of February, that performance is 715.98%. That's marvelous. That's marvelous. We're not even at a year. We're talking about a 715% return. 7 times your money. Let's give it up for the homeboy for that. That's good. That's good. And this is a young brother too. He's 20 years old. You know what I'm saying? About half my age. We ain't gonna get into all that though. So being that this brother's 20 years old, I figured let's also look at how have these stocks performed from around the time the brother was born to now. Okay, and I went back to the 4th of January 2000, and these stocks are up 940% from that date to today. Now, obviously, some of these stocks were not around at that time. Let's see. I know BNGO wasn't, of course, ABNB, which is Airbnb, they weren't, and there's a couple of others that were not trading or on the market at that time. So if you look at that, we're talking about 715% over the last year, just about, and 940% over the last 20 years. So again, I want to reiterate that this young brother of 20 years old, okay, was able to pick some winning companies. Okay. Okay, so let's get into some of the brother's questions. Okay. The brother asks, since he's young and learning, what kind of trade strategy do I use? And I gather that's really two type of questions right there. Some of the things that I can say is, with you being young, okay, no matter what you do in the market now, if we base this on history, historically what has happened, okay, stocks have a tendency to go up over time. So if we look at what has happened over the history of the markets, okay, you have an opportunity here to really grow and learn and try various different things. You know what I'm saying? Since you're younger, and I'm going to assume that you don't have no responsibilities. We never heard, you never told me about having no child or nothing like that. You can take more risks, because even if you're wrong and you go through some hard times or some losses in your portfolio, you have more than enough time to recover by the time you'll be ready for retirement. Traditional retirement, of course. Okay. Let's see. What else we got here? You're young and you're learning. You know, again, there's various different trading strategies. You know, you have long-term trading strategies. You have swing trading strategies. You have intermediate trading strategies and day trading strategies. So with your life, let's say if you was, you know, to retire at 40, that's fair, 40. You can take 5 years to work on any one of those strategies. It really depends on what your goals are. You know what I'm saying? We haven't really chopped it up about whether you want to retire early or none of that kind of stuff. So, you know, it really depends. Okay, if you want to get into my trading strategy, what I do, what Absolute does, okay, my trading strategy is kind of complex, or at least it sounds complex. My trading style is hedge scalping rooted in mean reversion. Okay, so for the average people out there, or the profit people out there that may not know what I'm talking about, and for you young blood, okay, all that fly talk simply means that I'm hedged. That means that I'm neutral on the market direction. That means the market can go up or down. At any given time, I strive to keep my portfolio hedged. So whatever happens, if we rip up, if we tank, I'm going to profit from those movements. But I'm neutral. Okay? I seek to profit off of small price changes. That's the scalping. Okay? I can do that in a variety. I can do that, you know, daily in a day trading style. I can do it swing trading, you know, a couple of weeks to a month or something like that. What I've been doing as of late is trying to be more intermediate with it. Okay. Okay, and then I'm a student of the markets. I study the markets. You know what I'm saying? I study life around me. The markets is one of those things around me. I study that. So with me studying that, I strive to construct my trades based on mean reversion. And mean reversion is the theory that asset prices or asset price and the historical returns eventually revert to the long run mean or average. That is basically my style, okay? Which is a combination of a lot of different things, which comes from the experience that I have, okay? Let's go on to the next question that the brother had. Great question. The brother said he feels like his portfolio is made up mostly of tech stocks. He wants to know if that's a bad thing and if he should diversify his portfolio some more. Okay? Now, again, when you deal with historically, when you deal with, just how this game works, okay, it's always a great idea to diversify your portfolio, okay? There's always, you don't want to put all your eggs in one basket, okay? There's always something that can happen. They call them black swan events, might be a little racist if you are sensitive, but a black swan event is something happens, something happens that, I can't really think of something right now that would happen, but something could happen that could affect the tech industry. You know what I'm saying? As an example, the pandemic low. You can't say it just affected tech, it affected the market as a whole. Generally, 90% of stocks will follow the overall market. So here we have a situation where we had this pandemic that seemingly came out of nowhere, all right? And it affected the market. So if our 20-year-old young blood was about to retire, in March 30th of 2020, he would have felt a huge blow to his portfolio because it was concentrated all in tech. Okay, there's possibly could have, I should have probably looked at it before taping, but there was probably something that balanced that out. From memory, dealing with what I trade, I traded volatility, so perhaps volatility may have mitigated the losses he felt or even balanced out his portfolio. You know what I'm saying? Because as the market is fluctuating and getting more and more volatile because it's dropping, the volatility derivatives are going to go up in price. So he could have been gaining money on those volatility instruments while his portfolio was going down. And, it possibly could have balanced out. And this is what a lot of these big dogs do or hedge funds do, that their portfolios are always hedged. They're always protected in case one of these things happen. So I say all that to say it's always good to diversify your portfolio. But here's another good thing. At 20 years old, okay, I don't know how long you've had this portfolio. I don't know what your cost basis is on these securities. All I can tell you is that based on your age, you have a lot of time where you can begin to diversify your portfolio. We can hook up offline, and I can explain to you how you can do that over time, over the next 6 months, over the next year, over the next 5 years, how you can build out a well-rounded portfolio. But that is definitely something that you should think about doing, is diversifying. When you talk about diversification, some of the other industries that are rocking and rolling right now, as of today, as I looked at it today, this thing could all change next month, is residential and commercial building industry, the food industry, meat products, which is kind of surprising because I thought everything was going towards the Beyond Meat way. But based on, the homework I did today for this video, these are some of the industries that's popping, rock and rolling right now. Insurance industry, brokers. So I don't, it looks like the brokers is making some money right now. Retail, business service industry, retail home furnishing industries. These are some of the other industries that are popping at this moment. So always try to, think of other industries that are up and coming, that are good and solid, that you can start diversifying out your portfolio. The other thing that I wanted to mention that this whole pandemic has taught me a lesson in that tech is just like beautiful, man. Like, for instance, I know last year, the tech indice, the NASDAQ, went up 40%. It was the best performing indice. So what that says to me, I'm wondering now, is tech always going to be, you know, this behemoth, this giant? You know what I'm saying? We do have an example in the past, which is the dot-com bubble burst. This is actually before you was born. It was in the late 90s that we had the dot-com bubble burst, and that was all dealing with, you know, a lot of companies was getting money and bubbling off of the simple fact that they had .com in their name. They were creating this internet presence. You know what I'm saying? That was the new thing back then. And look at what has happened over the last 20 years. I wonder, like, tech must always be, you know, the big dog. You know, I'm going to look into that. We're going to politic on that and see. I'm just, based on what I know and what I've experienced, I wonder if that. So it's not a bad thing to have a lot of tech in your portfolio. I mean, some of these things were up, you know, over 1,000%. It was ridiculous when I was running through it and looking at it. It was ridiculous. You know what I'm saying? These were some great returns. So there's nothing wrong with that. You just want to offset that with other things so that if tech, you know, feels some pressure, you'll have things to alleviate that other pressure. And again, I could work with you on that. Just like I could work with anybody that's out there that's listening right now that doesn't have this knowledge. Get with Absolute and let's work it out. Let's talk. You know what I'm saying? I do a video for you. You know what I'm saying? Okay, let's move on to the next question for the brother. The next question that the young blood asks is, how long have I been trading? All right. Check out what I found today. This is my first trading journal. My first one. Okay. The first entry is on 6/13, June 13. 13 is a master number of 2011. So we're going on 10 years that I've been in the game. 2011 is the year of the European market crisis. So that's what was popping that year. You know, it took me some time to discover that was a bad year for the market. You know what I'm saying? Or a flat year. I wasn't always into, you know, checking the stats and all of that, and, you know, all the mathematics with it. I wasn't always that way. You know, at one time I was just a guy who had a vision, you know what I'm saying, and wanted to know how can I download the money in my mind to my pocket. And, you know, the market seemed like the way to go. And I started rocking with that. But at the time, you know, I was green. I didn't know. I was like the young brother, the 20-year-old. I mean, actually, I wasn't like you. You actually performing better than me, because at 20 years old, I didn't hold no stock, son. Nothing. All I had was, you know, whatever loose change I had in a jar in the crib. You know what I'm saying? I didn't have no stock holdings. So you doing better than me. You know, that reminds me of a quote that I wanted to use, man. The quote was from Malcolm X, and it goes like this. And it goes a little something like this. The young people are the ones who most quickly identify with the struggle and the necessity to eliminate the evil conditions that exist. I don't think y'all hear me though. He said, the young people are the ones who most quickly identify with the struggle and necessity to eliminate the evil conditions that exist. So it's very good that at 20 years old, you were able to put together this lovely tech portfolio. Okay? So respect. Okay, let's move on to the next question. Let's see. The brother wants to know, what is the best way? Oh, pardon self. It's, what stocks are you currently looking at? Okay. So basically, my bread and butter is made by day trading. which means the majority of the time I'm just so caught up with that I really, I rarely, go out there and, look at this particular stock and fall in love with this particular stock. It's whatever's moving. Wherever the money's at, that's where I'm going to go and try to, exploit the price and get some profit out of there. You know what I'm saying? As I've studied the market, there's companies, there's histories like Apple for one, where the history is just so beautiful and you're just like, wow, I want to find something like that where I can invest in it and just watch my money appreciate. I mean, I know at one time I just looked at stuff that I was trading and I saw that if I had just held it, I would have gained so much money more than all of this, in and out trading stuff. You know what I'm saying? I could have just bought it and left it. However, we're dealing with how I came into this game. I came into this game, trying to make $1 out of 15 cents. So I like to see green each and every day. I like to ring the register each and every day. So I'm in and out. However, some stocks that are very interesting to me right now, one of them I just started looking at maybe about a month or two ago. I put it in one of my watch lists, and that's ARKK. So that's in your portfolio. So great minds. Some of the other stocks that I'm interested in that I have traded, I haven't traded all of these. I've traded the majority of them, but they have very compelling and interesting stories. And, as time allows, I'm going to do my best to exploit them as best as possible, and those are APPS, MARA, MARA, ENPH, ENPH, YAYO, YAYO, NEO, RIOT, LAC, and Lithium, LTHM. These are some of the stocks that are very interesting to me. I'm keeping a pulse on them, looking for decent entries in these. It's just very, very hard as we're creeping up higher and higher. I haven't really had an opportunity to exploit them like I would, but I have traded some of them. Mara and Riot have been very, very good to me. Those are tied to Bitcoin or cryptocurrencies in general. So those have been really good for me. APPS and ENPH have been good as well. LAC is interesting. It's been doing its thing. But again, there's so much more money to be made. So I'm going to keep watching those. However, whatever is moving and popping, there may be something else next week that comes out that I'm like, whoa, this is the thing. And I may focus on that, Okay, the next question. What is the best way to build a skill set to day trade? Again, for day trading, there's a very particular set of skills that you need to be aware of and in tune with. And pick any trading strategy. Do a search and pick any trading strategy. It is going to be, of course, some particulars in learning how to do that particular strategy. However, the most important thing for you to learn and study is yourself. And it's challenging for me to just tell you, what's the best way to get started, because I don't know what your goals are, and I don't know what your trading or investing temperament is like. So the best thing to do is to study yourself. You know what I'm saying? There's some things that you can do. One of the things that I've never done, which a lot of people have done, I have a friend who's done this before, is paper trading, where you can actually trade, whatever it is, but you're not trading real money. Okay. This is a good exercise because you get to try whatever strategy. You can try it out and see how it performs. Okay. And many people have done that. You can go around, there's a lot of people who do it. There's brokers out there that offer paper trading accounts and all of that kind of stuff. The only thing with that is there's a very important component that's missing with paper trading, and that is the fear and greed aspects, or the psychological effect of having money tied up in these trades. When you're trading like this without money, it's different. It's very different. If you have $1 million in a trade and it goes against you by $200,000, you're going to react differently than you have. It's just fake. It's a video game. You know what I'm saying? You're going to act differently. So be aware of that. The reason why I mentioned paper trading is because that's good to learn the mechanics. And then you're learning the mechanics without any money involved. It's questionable. It's a theory like, what if I do this and then when the money's involved, I don't do anything what I'm supposed to do because I'm scared or I'm overexcited or whatever, when this is really popping off, when it's really happening. You know what I'm saying? That's something you can consider. Okay? But this is Absolute from the Absolute Boss Collective. We're gonna tell you the right thing, baby. We're gonna tell you, we're looking out for you. So I'm gonna just tell you that paper trading, don't turn your nose up at it. It could be a viable technique for you to learn how to trade if you want to be a day trader, okay? Because that's what your question said, day trader. You don't necessarily have to be a day trader. You could be a swing trader. You know what I'm saying? You could be a position trader. There's various different routes that you can take in this game, or you could just fall back and be an investor. There's various different routes you can take, and you have to look at yourself and study yourself and weigh and judge what your goals are to decide what's the best course. Once we know that, we can go forward. And again, that's something we can politic offline about. We ain't got to tell everybody all your particular business. You know what I'm saying? But I just want to put it out there for you. Give you, this is the broad strokes. You know what I'm saying? Because I'm pretty sure there's people out there, some of the profit people out there in YouTube land have some of these same questions as well. Okay? So study yourself. Okay? Boom. And then also, you can always start small. You can always start trading with small money that you're willing to lose, just so you can get the idea and the feel of doing it and learn to master yourself and master your emotions while you're doing it. So whatever, when we politic and, build on that, we can get into what's best for you to proceed. Okay? But these are some of the options that you have. Okay? Next question. Do you see a contraction in the market coming? Now, contraction is just a consolidation period. You know what I'm saying? And right now, based on what I know, based on what has been happening, there isn't really too much of a catalyst to take us one way or the other. You know what I'm saying? There is potential catalyst that's out there. For instance, you have Biden with the stimulus. What if they came out Monday and Biden said he's going to give everybody $10,000, he's going to give everybody $25,000? I don't know what that would do to the deficit, you know what I'm saying? Or the value of the dollar and all that stuff. All these things would be affected by that. However, you're going to see a huge pop in the market if this man came out and said he's going to give every American citizen 10,000, now 10 racks to get out there and stimulate that economy. You best believe the market's going to take off. I could see 50 points on the S&P easy. Okay? Then again, the CDC or one of these Fauci gang or one of these clowns could come out and say the coronavirus has gotten worse. You know what I'm saying? We got, 100,000 people dropping dead every day. That would be a negative catalyst. That will cause the market to fall, or could cause the market to fall. Especially, earnings reports come out and they say, yo, listen, all of these tech darlings that we're talking about, Amazon, Netflix, all of the winners of the pandemic could come out and say, you know what, check this out. Cats ain't rocking with us no more. Netflix could say our subscribers have dropped. Amazon could say people are revolting against us and not shopping with us no more. We ain't making our numbers. You know what I'm saying? People could come out and say people is hoarding money or people don't have money. You know, again, coronavirus, people dropping dead. The economy could get worse. You know what I'm saying? That could be a catalyst to take us lower. The probability of these things happening, that's a different story. You know what I'm saying? So a contraction or sideways movement is pretty much, I do see that coming. And also another thing is like, you know, bear markets don't last that long. And through this whole time of, you know, my trading and my journey, we're talking about nearly 10 years. I can't tell you how many times I sat back looking and waiting for the market to fall, positioning myself for the market to fall. And the market didn't fall as much as I wanted or predicted it to. Okay. Conversely, you know, I could say the same thing about the market taking off. There's one of these other videos I recently did where I said I expected the market to pop on tech earnings, Apple earnings and all of that. I expected it to pop. It didn't pop. Most of the time, the market is going to go sideways. So I definitely see a contraction coming. I would say, depending on what happens with this stimulus and all of that kind of stuff, if we get the stimulus pushed through, which there was some positive news on that today, we'll see where this goes. Because now they're talking about, you know, this possibly getting past, I think, late February or something like that. So we'll see what happens, where that goes. Okay. But that's a catalyst to take us higher. Once the market goes higher and pushes past resistance, there's really nothing to stop it, because you're going to have, you know, those that are early to the party, those that jump right on it as it happens. You're going to have the early adopters that are right behind them. Then you're going to have the latecomers. And all of that can keep pushing the market higher and higher and higher. There's something that's called FOMO, fear of missing out. So, you know, there's people calling for 450 on the S&P, you know, at the end of this year, you know, and I could see it happening. There's definitely some catalysts that can take us that way. Then again, things are getting overstretched. You know, as the next earnings season rolls around, it could be uglier. If it were uglier, you know, the jobless situation could get worse. There's some things that's out there that's lurking around, some black swans that's out there that could take this market down. In the meantime, while we're waiting for these catalysts to play out, what we gonna get? Sideways action or contraction and consolidation. So you just gotta play it by ear. That's why in my trading strategy, I stick with price action. You know what I mean? That's something that I'm constantly working on improving, price action. And if you want to learn how to take advantage of price action, hit me up. Leave a comment below. Let's start politicking on that. Okay, let's move on to the next question. Next question is, what's the best way to minimize my risk? Excellent question. And you know what? Once this question is answered, okay, this will set you up for everything else. The best way to minimize your risk, money management. Just like when I just said now, the best way to build skills in day trading was to possibly one of those options I gave you was to start small. So if you want to start small and you say, hey, I'm going to trade with $100 today, I'm going to give myself a $20 risk or a risk cap, so to speak, which would be a 20% loss. So you're going to say, hey, I'm going to put this $100 in the market. If I lose $20, I'm out. Closing the trade, I'm out. Okay? Even if you do that and you're wrong, let's say you lose $19, catch it at $19, you get out. You got $81 left. I don't think that's going to mess with you psychologically. Because you need to understand, somebody like myself who's been in the market for about 10 years, I only have a 66, this is talking about my average over all of this time, you know, about a 66, 70% win rate. You know what I'm saying? Like three out of 10 times I'm wrong. 4 out of 10 times I'm wrong. So if you understand this and realize this going in, you can't really get in your feelings about losing. You know what I'm saying? Nobody's going to be able to make all of those calls. And that's one of the reasons why I set up the Absolute Boss Collective, so we can come together as a set of great minds and other people can look at other things. And we can politic together and work on, you know, picking the best companies to trade or invest in and things like that. Something you see may not be something I see. Okay? I don't know how long you had this portfolio, but you're in ARKK. That's something that I only recently got interested in. You see? So we have been politicking about this earlier. Perhaps I could have took advantage of that. I know I could have probably got a better price than it is at right now, $140 something. You see what I'm saying? So money management is very important. And if you can manage your money, then you manage your money, manage your risk. I should really be saying risk management. Risk management is how much are you willing to risk to trade? How much are you willing to risk in order to make $1? Okay, you could say I'm gonna risk $1, but I want to make 2. You know what I'm saying? I'm gonna risk 50 cents, but I want to make $1. Okay, you don't want to risk $100 to make $2. That don't make no sense. Because you're already stacking the odds against you. Okay, so it's about risk management. Once you can figure out what your tolerance is, what kind of trader you are, then you can figure out what is the best strategy to take. Especially, see, with me, I have time to sit here and watch price and stuff like that. That's also the culture that I came up in as a trader. Like I learned everything the wrong way, the hard way. You know what I'm saying? So there's some habits that I gotta break that I'm still working on. You know what I mean? But I kind of have this tendency to constantly want to be in and out, like hand to hand. You know what I'm saying? Hand to hand. There's somebody that's selling the weight and there's somebody that's selling the little baggies. You understand what I'm saying? And that person that's out there on the corner that's constantly, you know what I'm saying? That's his tendency. And I have a tendency to ring the register constantly. 4 or 5 times out of the day. Once I see green, I'm out. That's me. I'm a scalper, B. That's what I do. But that might not be what you do. Okay? And I'm working on implementing other strategies and building other portfolios for other things. You know what I mean? So that's basically it. You know what I'm saying? Great questions. Again, we will politic, you know, set up a call, a consultation, and we'll go more in depth into your particular needs, young blood. And for anybody that's out there in YouTube land that want to have a specific catered mentor session with the brother Absolute, hit me up in the comments, bro, and let's get this popping, son. Absolute Truth for Allah from the Absolute Boss Collective, and I'm out of here. Peace.